A lot. And I think it's important to understand that the damage wasn't just last week. I mean, this is a stock that peaked relative to the S&P in August of 2020. So we're talking about 18 months of underperformance that preceded last week's decline. And I think it speaks to the broader issue here that FANG as an asset class hasn't existed in 2 years. These stocks really began going in divergent positions all the way back in summer of 2020. So when I look at a name like Facebook, I recognize there's some long-term support in this 210, 220 range, but there is so much resistance on top of it. And any bounce, I think any rally, you'd be well inclined to be a seller because there's going to be sellers on top of us here, particularly for a stock that has continued to make relative lows over the last 18 months.
You mentioned summer of 2020, and that's about when I believe Amazon started to really underperform. And that is a chart that you actually loathe. And that's a word that you use yourself relative, in relationship to this chart.
Those are our words, and it is. And I just think it's somewhat ironic. We've been in what is described as one of the best consumer environments over the last 18 or 20 months. And the most important consumer stock, perhaps, of our lifetimes has not done anything. I mean, no one's made a single dollar of performance in Amazon since July of 2020. It's another name, right in this 3,300, 3,400 range. There is so much resistance. We have to imagine that there will be sellers on top of us. But what I think is maybe most telling is, despite how poor the stock has been over the last 20 months or so, 57 of 57 analysts who cover it still have a buy on it, right? So I think the street has a long way to go in kind of coming around to the idea that this group of names or these types of stocks might be on the sidelines for a while. When you go down like this, the amount of repair that is needed to fix the damage on a Facebook or on an Amazon is significant.
It's interesting because Amazon, unlike Facebook, actually had a pretty good quarter that was well received by the market. So, Chris, so does that mean that you don't like the S&P right now if Facebook and Amazon don't work?
So our kind of big call here has been own the average stock, that the risk to the market is at the top. And I think that's just really a construction of the weighting. What I would encourage the viewers to look at is look at the equally weighted S&P breaking out relative to the triple Q. So the average issue improving relative to the triple Qs. This is a very, very split tape. We did work this morning, like looking at all the relative highs in financials, all the relative highs in energy, juxtaposed against all the relative lows in consumer, in industrials. This is a very, very split tape. The average stock over the index is where you find performance.
Saw some highs today in the travel sector, Marriott, Expedia, AMD. Thank you very much, Chris Verrone. Good to talk to you.